Welcome to this new session organized by the Global Supply Chain Council. My name is Max Henry. I'm going to be your host and your moderator today. And today's topic, it's all going to be about inventory optimization. The title of this discussion is called Inventory Management Optimization, Balancing Regional and Global Priorities. As many of you know already, this is going to be an interactive session. And we want to really encourage people to ask questions. So if you have a question for our panelists, feel free again to click on the question mark button located at the bottom of the screen. We will take those questions as they get posted. We're trying to prioritize them as much as we can. So feel free to ask them at any time, and then we will take them when they arrive. We're going to have a discussion for the next 55 minutes. And again, if you have another meeting or call at 5 p.m. Hong Kong, Singapore, no worries. We'll make sure to get to stop the discussion a few more minutes before the top of the hour. So today we're joined by a number of very interesting panelists, and I'd like to maybe start by having them introducing themselves. And so we're going to do a quick round of intros before we jump into the topics that we have prepared for this discussion. So maybe we'll start with you, Thierry. Go ahead, welcome, and make sure to unmute here.
Good morning, good afternoon, everyone. I am Thierry Azalbert. I am based in Singapore. I have 30 years of experience setting up, leading, and optimizing supply chains in multinational companies. And in the last couple of years, I've gone back to school and studied data science, machine learning, and AI. And I'm currently doing some freelance consulting at the intersection of supply chain and data technology.
Thanks a lot, Thierry. Okay, moving on with Ashish as well joining us. Welcome, Ashish. Go ahead, unmute here.
Ashish, currently with Shell Lubricants business. Major part of my career has been with planning, working with inventory, demand, and related planning stuff. Look forward to connect with you on this topic.
Thank you, Ashish. All right, we have also Terence joining us. Welcome, Terence. Make sure to unmute you.
Hi, everyone. My name is Terry Short. I've been in inventory supply chain management for about 46 years across all industries. Home base is Australia. I tour globally and present at workshops, and at present I'm also working with AI with a company in China, and we're currently automating the supply chain. Thank you.
Great. Thank you. Thanks, Terry. Jesper is here with us. Welcome, Jesper.
Thanks for having me. Hello, everyone. I'm based in Singapore, and I have 20 years of experience leading the operational as well as the business transformation of various businesses. So in the current role, I'm the global subject matter expert on inventory management, and I've worked on various aspects of the supply chain from replenishment, master data, demand supply planning. I look forward to discussing more with all of you. Thank you.
Thanks, Jesper. All right, we have Craig as well joining us. Welcome, Craig. Go ahead.
Yeah, hi everybody. Yeah, Craig Alberston, based in Melbourne, Australia. I'm CEO and principal founder of LogChain Partners, a boutique supply chain consulting firm operating here in Australia and New Zealand and across the region. My clients primarily are in the retail, manufacturing, industrial products, and also in the mining and resources sector. And do a lot of work across inventory management, which includes supply chain optimization, planning, and broad end-to-end supply chain strategy. And I've got a number of live engagements actually at the moment dealing with this inventory optimization piece. They're quite topical.
Great. Thank you, Craig. All right. We have Lorenzo also joining us. Welcome, Lorenzo. Go ahead.
Hi. Hello, everybody. My name is Lorenzo. I've been based out of Geneva, Switzerland, in business for about 30 years, mainly with global corporates. The last 5 years as an advisor, freelance consultant, and interim manager in various logistics and supply chain operations roles, including also the optimization of S&OP cycles and connecting the dots between sales and the fields and the customers. So glad to be here.
Great to see you again. All right. And we have Troy as well joining us. Welcome, Troy. Go ahead.
Hi, I'm Troy. I'm based in Sydney. Troy Chapman. I used to be the director of Landcom, which is a big multi-property organization, and we had to optimize and do supply chains in that space. And we also had to, and my whole career of 20 years, I've been working in various procurement supply lines across the from Australia to the UK, optimizing various supply chain lines.
Great. Thank you very much, Troy. Okay, so if you have been joining us during the introduction, I want to remind all of you that in the next 50 minutes, we're going to talk about inventory management optimization. And again, we want that session to be as interactive as we can. So if you have any questions, you can click on the question mark at the bottom of the screen, and we will take your questions as they come. So before we get into the audience questions, I would like to maybe start with by asking all of you, why do you think inventory optimization is becoming such a critical focus area for all the supply chain and logistic leaders today, especially in the region where we are, which is the APAC region? So maybe I'll get your first, response on this. Yeah, go ahead. Yeah, feel free to make sure to unmute. Yeah, go ahead, Craig.
Yeah, thanks, Max. So look, I think for me the three key drivers at the moment for inventory optimization, I'm thinking across a number of clients. One is, the cost of working capital has gone up significantly. Money's not as cheap as it used to be. So whereas before it was like, get the inventory at any cost almost, because your cost of capital was very low. Now with interest rates being so high, suddenly that inventory is now burning a hole in clients' pockets, and they need to be far more efficient with the use of that working capital. Secondly, notwithstanding all of that, supply chain disruptions continue, and so how do you optimize your supply chain and balance out those working capital demands with still maintaining good stock availability and meeting your service level requirements for your customers. And then thirdly, with technology rapidly evolving, managing obsolete stock in particular, again, as new and better models or formulations in some of my clients in the chemical sector, etc., come along. So how are you managing that product portfolio and dealing with particularly the long chain, the long tail that I see a lot of clients, struggling with long tail inventory and slop stock, which again is a drag on working capital and filling up your warehouses. And again, in Australia, I'm not sure as it is across the region, the cost of warehousing is becoming incredibly expensive. So inventory has got both the balance sheet impact as well as a P&L impact, and optimizing is becoming increasingly important to many organizations.
Thanks, Greg. Yeah, Thierry, go ahead. Yeah.
Yes, in line with what Craig was saying, if we remember after COVID, we've seen some articles saying that globally companies have added 8 billion euros of inventory in reaction to the disruptions from COVID. So obviously that's a very big number, and companies are probably looking at getting that down a little bit nowadays, even though we must not forget that inventory does sit on the asset side of the balance sheet and not the liability.
Yeah,
okay.
I think if I could add, I think as a summary to what Craig and Thierry mentioned, when it comes to inventory, it can be a problem because if you have too much, you're tidying up working capital. If you don't have enough in the right place, you don't respond to customers' requirements. So essentially, the reason why this is a very focal area in the business is because either way, you're either having a financial issue or you're not responding to market needs. And obviously, with the issues that we had in supply chains and the risk management becoming more and more important, obviously inventory plays a role. The only variable, I think, is if you work for a corporate company, listed company, where you have quarterly financials, then you are under more pressure to show working capital or to achieve working capital targets. If you are in a private company, like for example I did for a few years in China with Huawei, you don't have to reveal those numbers, so you you have much more freedom in your decisions around working capital because you don't have investors to respond to on a quarterly basis. So that gives you a little bit more flexibility.
Okay, yeah, Ashish, yeah, go ahead. Yeah.
Yeah, just a different perspective. I see saving working capital is a way to fund your own growth. So if you're able to reduce your working capital, you can have those capital in-house rather than going to the banks and asking for cost of capital, and go for inorganic growth or organic growth and beat your competitors. So it's a different way of seeing things, that you can beat your competitors by having inorganic growth, by saving a capital and not go to the banks.
Okay, yeah, Troy.
It is always a hard mix between how much inventory you hold. And the other thing that another focus is happening, particularly as there's a lot of uncertainty in the world at the moment, and COVID sort of drove this, it's that having resilience and sort of agility to our supply lines. In that respect, is that, you know, if you are in sort of just-in-time sort of manufacturing, you don't want a whole lot of inventory. You should be exploring alternative supply lines and building up your your cross-stream, not just downstream supply portfolio to try and optimize your, in case an event has happened and you do need to increase or manage the additional stock. It's just something to consider in today's environment.
Okay, all good. Anybody else? Terence, Jasper? Yeah, Jasper, go ahead. Yeah.
Yeah, perhaps I can highlight one point, which is in relation to the market drivers when it comes to the consumption. So within APAC itself, it's being very diverse. Each of the government has different priorities. So in the context of Schneider Electric, for instance, we do see that since COVID, there's been more and more digitization, data centers, and there are also shifts in terms of the way how it is being managed. What I meant by that is, for instance, in the context of Singapore, it used to be one of the main hubs where lots of data centers, Amazon, Facebook, Meta, all of them will be coming to Singapore. But then regulations change, right? Singapore say, I'm going to be more sustainable. There are no natural resources in Singapore. We are not going to be having that much of a focus anymore. And now demand is flowing to Malaysia, for instance. So that's where I think when it comes to the inventory optimization, is back to the basics, really having the right inventory in the right place at the right time to be able to stay competitive.
Okay, that makes sense. Yeah, Terence, would like to add something?
Yeah, I'll tell you, if the people in Europe have got excess inventory built up as a result of COVID, then their systems were broken to start with. They should really be looking at supply equations. They should be looking at S&OP introduction to get all the internal functions aligned so that that sort of thing doesn't happen. At the start of COVID, management should have directed that every month the lead time association with product acquisition should have been reviewed. And that should have, we'll just say, redrafted the supply equations to look at what's needed, whether it be a second line freight option instead of sea. It could have come via smaller quantity LCL through air, or even an alternate supplier with a different country. But there's options and ways to fix the issues. People just need to grasp it and start probably doing a few projects internally to look at ways to reduce it. And the sales marketing team are the people to go to initiate the plan. So a lot of work ahead for the Europeans.
All right, we're going to get into more details. And before we jump into the other topics, maybe I'd like to ask also some of you, what is optimized inventory for you in your organization? Is it related to cost savings, resilience, service levels, or something else? If you had to define, inventory optimization, what will it be, and what will it relate to?
I think it depends on the type of business you're in. on the type of customers you serve. If you are in the FMCG, the rule usually is you're going to have the products on shelves, otherwise customers will buy from a competitor. If you are, for example, in the project business, then priorities may change because it's not much the product availability itself alone, but also the reliability of supplies, because if your products are late, then the whole project will be delayed because steps happen one after the other. So reliability is more important than product availability in that case. It really depends how your network is structured. If you have a global presence, depends on the transit time, meaning, if you have air freight replenishments or sea freight, which are much longer. Do you have a local warehouse? Some people think about a VMI setup to make sure you have got supplies rightly available. So it really depends on the type of business you're in and on your strategic go-to-market decisions you've taken, and as a result, obviously, you act in that sense with the considerations that relate to financials as well, because obviously inventory means also financials, means working capital that is engaged until goods are sold. So I don't think there's a specific one set of answer to this question, which is a very good one. Obviously, there's a lot of variables that come into place.
Okay, thank you. Yeah, Ashish. Make sure to unmute. Sorry. Okay, go ahead. Yeah.
I think this is my experience. What I've seen, it has evolved along the years. So uh, at the start of my career, it's all about working capital saving and cost. Then it became more around service and cost. And I think in last 3-4 years post COVID, I think the third element which has got added is resilience, is creating a business continuity plan. How do we ensure that we decouple any disruptions which come in? So combination of cost starting with then service and then now being a resilient supply chain, and this is how I mean by inventory optimization. This is my experience.
Okay, thank you. Jasper, yeah, go ahead.
Very similar to what Ashish has mentioned. I think the big part of it really is how good is good enough for us, right? So what matters more to the business? At the end of the day, when it comes to inventory, we can go to the extreme extent of saying, yep, super optimized. I'm trying to go ahead with a very high profitability. That probably was the case prior to COVID, but it can make or break as well because it's overly optimized. There are perhaps no buffer at times. So that's where I think everyone is taking a step back as well these days, which is to say, hey, uh, rather than having just one manufacturing facilities, do we have two, maybe more, in the context of the tariff wars this day? In fact, it can be pretty beneficial as well when it comes to keeping the availability of the revenue when it comes to top line. So I think all of this part would really come in. So my key point would be what matters most for the organization.
Okay, yeah. Craig, yeah, go ahead. Yeah.
Yeah, I think Lorenzo's point was spot on. It depends on the industry, and it also depends on the type of supply chain. I mean, most people think about traditional, what I call outbound supply chain. So a manufacturer to a wholesaler to retailer to a store. That's what I kind of call traditional supply chain. There's also the other supply chain is inbound supply chain. So if I'm a manufacturer of my raw material inputs, for example, a client of mine, which was a major power transmission utility here in Australia, looking at their inbound supply chain. So, a transmission power utility doesn't produce anything. They move power from sources of generation to obviously sources of points of demand. But you think about all the poles, the wires, the transformers, the switchgear, the circuit breakers, so they have another class of inventory, which is just not, they call them insurance spares. So if I've got a fleet of transformers in the field, yes, I've got, inventory that I'm holding to replace those, for maintenance, etc. But I also need to carry insurance spares. So if something goes bang, I've got something there that can go in and replace that if it fails in the field, which does happen. And these things are worth, hundreds of thousands of dollars. And the lead time on these items have blown out in recent times, if anybody's working in the power sector, from what used to be sub 12 months to up to 3 years. So it depends on what the strategic objectives and the priorities are of the business. Whereas if I'm a retailer, say, a mass merchant retailer, and I've got 10 brands of toasters on the shelf, if I happen to stock out of a particular toaster, that doesn't mean I'm going to lose a sale. They're just going to buy another toaster. So it's all about the probability and the consequences of running out of inventory. So that's really the key trade-offs that an organisation needs to make. What's the probabilities and the consequences of that? If I'm carrying too much inventory, if it's low cost product, okay, not such a big deal, potentially. But if it's very expensive inventory, slow moving, if I get some of those things wrong, then suddenly I've got a working capital problem and a storage problem potentially if things don't move through the way I've expected them to.
Okay, yeah. Troy, go ahead, yeah.
Yeah, just adding to that what Craig and Ashish said, it really depends on your industry. It really does. Some will have a more cost-driven models, some have more risk-aware strategies. It really depends on where you're going to fall in those in that industry, and this is why I have all these experts on this panel to help you through all those processes. It's because there isn't one size that fits all. And it really requires analysis of your supply chain to work out where your pinch points are, how to optimize it effectively and efficiently. And also, as I said, if you've got a more risk-aware strategy that you need to go for, is you're going to be more inclined to hold stock, and hence why there's been an increase. Or if you've got the more cost-driven models, you'll be more inclined to try and have just-in-time sort of supply. But it's really industry-based. Just want to put that.
Yeah, that makes sense. Yeah. Okay. So we have some questions coming in, and I want to, again, highlight to those who have been joining us a little bit late that this can be an interactive session. So if you have a question, feel free to ask by clicking on the question mark button located at the bottom of the screen. Let me start by taking those questions now. We have a question I'm going to put this on the screen if I can. This is a question that from Sanjeev. I'm trying to spotlight, but for some reason it doesn't work. So let me, but the question from Sanjeev is, everybody can see it on the Q&A, is what's the optimal balance between centralized inventory control and regional autonomy for any global organization? And how does this shift in crisis scenarios, example, geopolitical disruption, tariff war, etc.? So anybody would like to, yeah, Troy, go ahead, yeah.
Question. Look, a lot of uncertainty at the moment, particularly in the global economy, is, we're not sure what's going to happen. Things are changing dynamically all the time. And this is what we're talking about, is that you do need to have these risk-aware strategies, is what is going to happen, what are you going to react to? You need to get in the forefront of it all. Is you need to have a crisis plan. You need to be able to work out, well, what happens if this scenario happens? How am I going to deal with this? It really is, it's going to come down to, there is going to be disruptions. You're not going to know about tariffs and things of that nature. It is very on topic today, is that you are going to have to find, where it's going to hit you more, where it's not going to hit you more. And you have to understand your supply lines. You have to go down to those levels. You have to talk about alternative supply lines. So, for example, if you've got your manufacturing in China, and you're based in America, or vice versa, you are going to be hit. Where are you going to? What's an alternative in case it doesn't get resolved quickly? Have you stocked up? Have you got a great inventory? Where are you going to find those solutions? You need to do those analysis of your supply lines. You need to get ahead of the game and work out exactly how you're going to manage those. If it does come up, what alternatives there are. You should be making contacts beyond your normal supply lines to help you through those processes. That's a great question.
Okay, thank you, Troy. Yeah, Thierry?
Can I just add with, did you say Terry or Terry?
I said Thierry, but Terence, you can go after.
Go ahead, Terry, in Australia.
Okay, Terry, go ahead, yeah. Terence, go ahead, yeah.
Okay. So when we talk about centralised inventory, it's obviously the principal warehouse, and you've got your satellite regional warehouses that are supporting local customer and trade. So to get this right, you need to ensure that your system settings recognise your centralised warehouse and that the regionals feed from that. You can still direct ship to the regional warehousing structure, but your usage patterns need to be picked up by the centralised or the major DC, so that the procurement can capture that and then get it in there and ship it out. During the tariff wars that are going to eventuate, again, a monthly review on lead time from all suppliers needs to be undertaken to ensure you don't get into the problems that Europe had with COVID. So redo your lead time associations with suppliers in your system in master data, so that the system will calculate and recalibrate your min-max levels to meet demand.
Okay, yeah. Thank you. Thierry, yeah, go ahead, yeah.
Yeah, I think, really there's not a single clear-cut answer, because everything depends on all the parameters of your supply chain, your lead time, your inventory holding costs, your cost of capital, the cost of lost sale. And I found that the best way to find the optimal between, of your deployment between central and regional, we use computer simulations. People call that digital twins. Simply model your supply chain, and this can be quite simple. Right? It's a few lines of Python code to be able to really put into equation your total cost or total profit, and then by running simulations with and exploring the hyperparameter space of what I mentioned, inventory holding cost, cost of lost sales, etc. You can find the optimal inventory deployment product by product, because all of that yes depends on the product life cycle. So there is a kind of scientific and mathematic way to optimize this on a case-by-case basis.
Okay, thank you. Jasper, yeah, go ahead, yeah.
When we talk about the global inventory policies, I believe we're talking about the corporate inventory norms. And certainly, for sure, there is no one-size-fits-all, like Terry has mentioned. However, one thing global we do recognize for sure is that region knows the region's context better. That's for sure. What the global team can do is to understand better and qualify those exceptions. So it's not just about the process and the tools. I think the question over here as well, which is often not being mentioned, it's the part on people. So having the feedback loop likewise to be able to understand, are there perhaps maybe gaps in terms of competencies? What can we do likewise? So when all these three P's comes together, we can make things better. So that's something I would say is a very key for me.
Thank you, Jasper. Yeah, Ashish, go ahead, yeah.
Globally governed and regionally executed. And when crisis comes, we have to bifurcate the crisis, whether it is a regional crisis or a global crisis. If it is a regional crisis, give all autonomy to the regional folk to drive their inventory policy accordingly, but within the framework of global governance. And like in my industry, in energy sector, sometimes the crisis can be global in nature. So that kind of situation, it should be globally governed and sometimes globally executed, like a major refinery not working or something like that. So again, as I said, it should be globally governed but regionally executed, and empowerment need to be given to the regional folks in a larger framework.
Okay, thank you, Lorenzo, and then Craig, yeah.
Yeah, I think like Terence and Jasper, they brought up two very good points. One about the way the network is built. For example, in my previous one of the companies, we had a structure where we had a mother and child warehouse structure. So the mother warehouse was the main centralized one that would replenish the locally present warehouse. And we got to understand that the secondary warehouse was never getting enough stock because the central warehouse was distributing it elsewhere. So It's a matter of understanding how this can be changed in terms of system setups. It depends on how, like Jasper mentioned, can we speak to customers or to customer service, for example, or to the sales teams who will understand in an SNOP or SIOP structure, communication structure, who do we give the priority to? Is this response to crisis a temporary one, or is this going to be a medium to longer term one? So we're going to shift the role of the regional distribution center to have the same hierarchical level as the main one. So there's a lot of factors that come into place, and it's always a matter of sharing and communicating in a fully functioning SNOP structure, so that you come to a balanced decision that may be consequences, financial consequences, additional transportation costs, for example. But that's what trade-offs are for. And if you want to be responsive to customers or to market situations or to crisis, you have to have this certain level of agility to change your replenishment cycles accordingly. So not an easy one, but I think those 2 points are quite important.
Okay, Craig, go ahead.
Yeah, I mean, I think, Lorenzo and a couple of other panelists have spoken about SNOP. I mean, a current client of mine, when I started their inventory optimization program, they said, where would you start? And I said, well, every inventory problem has its root cause issues in planning and forecasting. So for me, it comes down to that SNOP, that process. How do you get the people that are at the front end of the business and sensing and seeing the market demand, communicating that through to the people that ultimately are, scheduling supply or manufacturing and production, and getting that communication going. So it's a bit of a span of control question. So what is the lines of communication between the frontline sales organisation and then the back end supply organisation? So it comes down to operating model and organisational design. But I think to Ashish's point, within a framework, all right, so what are the supply chains you're dealing with, or the links of those? Where are the sources of supply? Where are the sources of demand? What does that kind of regional or global network looks like? And then, how do you then break it down so that you've got the communication between the supply and the demand side? So that might be, hey, we'll run a regional SNOP process, but then we've got obviously global supply, and those production, those demand forecasts roll up into the manufacturing centres and the global hubs. And then how does the product then flow out through the network from there? So it's a function of operating model and organisational design, and how information flows up and down the organisation or up and down the supply chain to make those decisions. But you're right, it's again, getting the balance right between centralised control. But if you're too far from the coalface, you miss out on those opportunities, or you're not seeing it in real time, versus having devolved autonomy out to the regions, and then next thing you know, you're carrying too much inventory across the network. And if you're not getting those demand signals back to the sources of supply, then again, you can be suboptimal.
Okay, all right, thank you, Greg. All right, we have many more questions. So I'm going to take the next one, and hopefully my system is working. Yes, it's working. All right, so someone is asking, in today's scenario where political and policy tariff changes dynamically, is it still wise to work with just-in-time concept?
So if I can, I'll answer with a very short one. When I was studying for my master's, one of the papers that I read was talking about Agile, which was a mix of lean and agile, which essentially means all and nothing, because you want to be lean, but at the same time, you want to have enough stock available. So they created this fancy academic terminology, and they wrote a very interesting piece of paper, by the way. I'm not saying, but obviously the question was, do you want to be lean? Do you want to be agile? So they created this halfway measure. So the answer to this question is, it's just in time. It's good enough for as long as there's no variations. Seeing what's happening today, I think a just-in-time culture may not be necessarily the optimal one, because there's too much variability at the moment, political, geopolitical, and you see what's happening with the weather and everything. So I would tend to be a bit more on the risk side and take more, or sorry, a bit less on the risk side and take into account more stock in order to be able to be more responsive to customers in case of excessive fluctuations. But yeah, it's certainly still important, but at the same time, it demands a lot of, it brings a lot of risks in itself.
Yeah. Okay, yeah, try.
Yeah, sorry, I realized I wasn't on mute. Just on this, it is really just some people are moving from those cost-driven models to risk-aware strategies. It really is something that's actually happening. But you need to work at your own industry. I mean, you know, we talk about Toyota is always a good example for just in time, but the reality is Toyota makes their suppliers hold all the stock. It's how they get around it, because obviously, you know, it's whether you can push it downstream is something you consider, because they may have the demand and they can do that. But for companies like Coca-Cola, you know, the final delivery, they always just use just in time. It depends on the industry. It depends on which industry you're in. It depends on which country you operate in. There's a whole lot of factors. When you talk about APAC, you know, and the coordination and integration in APAC, is you are finding that because it is such a diverse thing, and even if, you know, in 30 days or 60 days, whatever it is, I'm got it off the top of my head, that Trump decides to introduce all these tariffs again, it's going to cause another disturbance within the market. You know, so I think just, I totally agree with my colleague. It just depends on your industry. It depends on what's working for you. It depends on so many factors, you know, that you'll find is that you do need to sort of start thinking about it. And obviously you are, which is fantastic. You know, but there's no one brushstroke that's going to be able to say, yeah, move to this scenario or stick with this. And I think that's just re-emphasizing that.
Okay, great. Craig, yeah, you want to add something quickly, and then because we have more questions coming, and I want to be able to take all of them before we wrap up. Yeah, go ahead, Craig.
Yeah, I think the notion of just in time versus just in case, that it's a binary decision that's kind of a bit outdated. The reality is, I think, is a spectrum. You know, again, it gets back to what's the risk and the probability of failure or in the supply chain. You know, talk about Toyota. You know, the consequences of a failure, obviously the line stops, it's massive, but the probability of stuff not turning up at the line when it needs to is very, very low. And they've fine-tuned that process. So again, it gets back to that balance. So I think the reality is there's inventory. If you've got an hour's worth of inventory, if you've got a month's worth of inventory, and it comes down to what are the probabilities of failure and the consequences of failure. And so I think it's a spectrum these days. I think it's not a one or the other anymore. I think that's the reality of the situation.
Okay, all right. Let's move on to the next question. And this is coming. Hold on. Not sure whether you see it. So the next question, yes. Question from Yanisa. We operate across Southeast Asia. How do you standardize inventory policies with so much market diversity? Anybody who would like to take this? Yeah, Troy, and Thierry after. Yeah.
This is another great question. It's the fact of the matter is that Southeast Asia is moving at different governance, different governments are moving at different ideologies, different. It really is. Be nice if everyone's moving together, which is like Europe. Europe's moving reasonably together. You know, they've sort of worked out a lot of their trade barriers between the countries and everything like that, and hence you've got the EU and things. Southeast Asia is a little bit further away from it all, and with that, you do have these diversities. You know, there are some commonalities. You know, I won't go into those details now, but there are some commonalities that you can use to standardize inventory policies. But, you know, is there some countries such as Indonesia, for example, will introduce, you know, trade barriers instantly just to say, look, we don't want Apple phones anymore because they won't meet our investment strategy, you know, within the country. So you do have to factor in a whole range of different things depending on the markets you have. You have some overall global rules and policies, but you're really going to have to tailor it per market if you are operating across the whole market.
Okay, yeah. Thierry?
Yeah, on this one, I think we have to keep in mind that inventory policy is basically made of, on one side of a process and on the other side of parameters of that process. So the process bit is, do I place POs on a monthly basis, on a weekly basis, or do I place POs every time I see inventory going below a certain threshold? And when I place a PO, do I just replenish up to, or do I have a fixed order quantity? This is inventory policy. So you can harmonize that and decide which is your process. Then, of course, depending on the lead times and the specificities of the demand in your different markets, then you're going to want to change the parameters, meaning that you can have one single setup in your ERP that everybody uses and makes it simple to compare and to understand, but you then optimize the parameters to tailor to each situation.
Okay, yeah. Jesper, go ahead, yeah.
I believe when we talk about inventory policies over here, we are referring to guidelines and rules on how inventory should be managed. So for me, we are principles. So what's negotiable, what's non-negotiable? I think we have to be very clear on that context. Otherwise, it's going to be so-called like a Wild West, where everyone is going to put whatever parameter, yeah, right? So I take an example on one of the parameter which people like to most of the time, safety stock. We know what's the purpose for, manage demand variation, but think about it when it comes to business, everyone wants to have a say in it, be it be commercial whatsoever, right? So we just have to be very careful that there are many different instruments. So just like in the context of economy, right? When about Trump tariff war, there are so many instruments, interest rates, etc. But now for Trump, everything is tariff, right? So back to the part on the topic on safety stock, for instance, what scenarios do we say that it makes sense? Yep, it is going to be perhaps deviating from the defined policies. Under what scenarios it should not be, perhaps we should be tweaking with some other knobs in terms of the way how we operate. So I think that part is really critical. Otherwise, there's high risk of losing control.
Okay, thank you very much, Jasper. Okay, let's move on. We have more questions and really want to take them before the end of the hour. So the next question is a question from Brian. How do you manage inventory accuracy when working with multiple 3PLs across Asia? That's a good one, yeah. Yeah, Thierry, go ahead, yeah.
Well, in my experience, if you're lucky that you have multiple 3PLs and different organizations and different partners, that's actually a very good situation, because as long as you are able to set the calculation for inventory accuracy measurement and the frequency, then you have a basis for comparison in the same business and, well, of course, maybe different markets. But then that allows you to do some benchmarking, then relevant benchmarking, and to set objectives and set incentives, or on the contrary, penalties when the inventory accuracy is going astray. So I think this is actually a good situation to have to be in.
Okay, thank you. Yeah, Craig?
Yeah, look, the short answer is it's in the contract. And if there's a stock variance, it comes out of their pocket, and pretty quickly this problem sort of deals with itself. That's the short answer to that question. So measure it, manage to it, and then you need to make sure there's consequences in the contracts to deal with any variances.
Can I just add to that?
Yep.
Just make sure as
go
part
ahead,
of your contract that the cycle counting and the frequency are a part of that contract. If you don't have that, then it'll become random and things won't happen.
Okay, thank you.
Yep.
All right, anybody else would like to add anything on this, or I can move to the next question? Okay, let's move on to the next one, because there are more coming. And again, we have 10 more minutes before the end of the session. So if you have a question, please post it now. Question from Shandan. Where do you think we can draw the line, whether we focus on networking capital, or we can stack up excess inventory?
Well, First of all, like I mentioned before, if you are a listed company, you will very likely have pressure from the investors, the shareholders, to demonstrate ability to stick to the numbers you've committed to. Otherwise, you lose credibility. Otherwise, you end up having issues with the stock market. If you are a private company, you can manage your own inventory, you can manage your own decisions faster. You can decide to place inventory as you like. Let's say you're under less pressure, your go-to-market strategy will be more independent from external factors or from what's being communicated to the outside world. Like we mentioned before, it's all about financials. It's all about how good your system is to say, do you have, for example, I'm just thinking something, do you have a solid IT system? Do you have solid IoT devices that capture consumption of inventory across the various markets? So it really depends, again, on the industry you're in, the sector you're in, on the how many warehouses you have, how much you can exchange inventory from one warehouse. We can move inventory from one warehouse to the other in order to replenish potential shortages, the role of these inventories. So there's no really one answer. I think it really depends on all those factors and the ability to take a balanced decision, to know exactly what has to be. It's like when you have a recipe, you have to put all the ingredients in. You've got a nice S&OP cycle that allows people to communicate and to share information, to share numbers, to share trends, to share challenges, so that you understand exactly how to take the best balanced decision based on all these factors. So the very solid S&OP structure and the communication across all functions will be the key, I think, the winning factor that allows you to take the decision that is the best of your knowledge, which means after having taken everybody into account, which is somehow coming from lean, way of running the business and the stand-up calls and blah blah blah, all that stuff that allows people to communicate and share.
Okay, thank you. Yeah, Ashish.
I will see this from a business context rather than seeing is a working capital. See in terms of cash conversion cycle. Don't only see your days inventory outstanding, see your days payable outstanding, see your days sales outstanding. Benchmark with your competitors and see that what is your cash conversion cycle look like, and then accordingly, if you want to have more excess inventory, which helps to manage this cash conversion cycle better, go ahead with that. But I think don't only see inventory as an inventory topic, but as a sales outstanding as well as a payable outstanding. See as a business.
Okay, yeah. Terry, and then Terence, and then Thierry after. Yeah.
So all the answers so far have been good. The way that I would handle it, make sales and marketing responsible for slob stocks, and also make them fully aware that excess inventories will be their responsibility to, what would you say, reduce. That will fix that line pretty well. But with your networking capital, there are times where you're going to have to creep above that, but make sure you get sales commitment from the customer and input it into the system to justify the excess.
Okay, yeah. Thierry?
I'll put my data science cap on and say that this is an optimization problem, SKU or part number by part number, where you need to optimize between, on one side, inventory holding cost and the cost of working capital, and on the other side, cost of lost sales. And really, you have to find the optimal. And I'd like to respectfully disagree with Ashish. I don't think that benchmarking with competitors makes a lot of sense, because everything is so different. The data that you're working with, the lead times, the demand that you're actually seeing is so different and obtaining good benchmarks for competitors is extremely difficult. So I think doing an internal database optimization is possibly is a good way of finding the optimal in that problem.
Okay, Jasper, yeah.
That for net working capital, it's very important, but again, it's focused on the short term. So I think there has got to be a shift as well, where it is also looking at the opportunities as well from a revenue profitability standpoint, to how that can actually bring value to the overall business. Because when we say whatever on net working capital, it's the current assets, current liabilities, right? But what about what's looking? I think that's something that needs to be.
Okay, all right. We got 2 more questions and 5 more minutes before the end of this discussion. So let's get the other questions. How do you get finance on board when you need to hold more stock for resilience? Again, I appreciate if you can give us your very quick, concise, brief answer. Yeah, Troy, go ahead. Yeah.
I think S&OP is the
Okay,
answer.
Lorenzo, go. Okay, yes.
I just wanted to say that S&OP involvement, that's all, of finance.
Okay, yeah, Troy?
It's, you need to demonstrate it with facts. That's what it is. I mean, look, there's some emotion always in stage, you know, and, you know, there may be other factors in play, such as we were talking about it earlier, performance for large companies and so forth. They don't want to be holding stock. But if you can demonstrate the benefit, outweigh the risk and the risk management associated with it, you'll definitely get buy-in from the financial board. Because particularly around if they can see the cost-benefit analysis. And that may be a risk-benefit analysis, but it's still overall a cost-benefit analysis because of that risk.
Okay, Craig, yeah, very quickly, and then yeah, the others, because I'm a bit confused with actually raise your hands right now, but unmute and I will know, okay? Craig, go ahead quickly. Yeah.
Yeah, look, I mean, it's 2 simple answers to that question. Lorenzo's spot on. I mean, in a well-functioning S&OP process, you know, finance has got a seat around the table, and then there's a very simple chart you draw. Here's the return on invested capital going down as you reduce inventory. That's great, but then you have the opportunity or lost profit when you have stock outs, and there's an efficient frontier, and you go, this is why we do this, right? That's the point we need to get to. It's balancing the cost of inventory, or the cost of capital versus, you know, the lost opportunity or the lost profits through stock outs. If you can present that to any finance director, he goes, right, I understand. And obviously, as supply chains become more volatile, the probability of lost profits goes up, and so hence why you need to increase your safety stocks.
Okay, thank you, Craig. Jasper and Terence, if you raise your hand as well. Go ahead, Jasper. Yeah.
I would say 2 parts. One is the sponsorship. So clear sponsorship from the management on that, and of course on the stakeholders management, because if you are able to involve people who are very knowledgeable on these topics, so for instance in the context of resilience, let's say there is a foresee future where there is a risk of shortages, perhaps you could get people from the procurement who knows very well in terms of the industry potential risk on that, and you'll be heard.
Okay, Terence, you wanted to add something? Yeah, go ahead.
Money talks, chase the sales orders. Thanks.
Okay, that was quick. Troy, Troy, you wanted to add? You raised your hand here.
Sorry, my hand was up last time, but I agree with what everyone said. Absolutely. Yeah.
Okay, all right. So we got, okay, let me try to take this final question. If you guys can respond to it. Someone is asking, how do you balance regional autonomy with global inventory targets? Any tip? I think, you know, we've covered some of this before, but maybe that's a good question to kind of wrap up. So in just, you know, in less than 2 minutes, anybody would like to take this and respond and maybe give you final advice to the audience watching? Yeah. Final tips. Yeah.
My hand was still up, so I'll take it on. It's simple. If you understand the supply equations and you feed that to each of the regional and main warehousing facilities, then you'll just simply use the warehousing as an extended arm of your supply chain. So go that way and you won't carry excess stocks.
Okay, good point. Thank you, Terence. Jasper, yeah, go ahead.
It really depends on how the global inventory targets are given. It could be at the aggregate level or a site level as well. Certainly, I think from a region standpoint, as long as you are achieving the targets on the regional front, I don't think that really matters too much. So more importantly, I think that's where the flexibility actually comes in, because we do know that issues do happen. Crisis happens all the time out of a sudden. So that's something which the region would then have to take it internally, rather than it's just simply something that's being cascaded top down. But it has also got to be from a bottom-up standpoint.
Okay. Yeah, Thierry, maybe your final thought.
Yeah, my final thought actually is only slightly related to this question, but one point we haven't touched on is leveraging the new ML models to improve your demand forecasts, because improving your demand forecast or reducing your error by 10% can drive your inventory down by 4 to 5% and reduce your stock outs by 2 to 3%. And I think, just where we are now with the ML tools we have, we can incorporate data about promotions, about pricing, about competitor moves, and with leveraging exogenous data like this, it's easy to get a 10% error reduction in demand forecast. So that's something that people should have in mind.
Yes, and I knew that you will bring this topic because we get to cover it. So thanks for reminding us, and we will probably keep that topic around ML, and we also didn't talk enough about the role of SNOP and many other topics that we prepared for this discussion. So it's the end of the discussion. I want to thank you again for being with us today. Thank you, Troy, Ashish, Lorenzo, Terence, Craig, Thierry, and Jasper. Thanks for being with us, taking the time and sharing your insight. We didn't get to cover all the topics that we prepared. There was just too many questions from the live audience, but no worries. It's okay. We will try to schedule another session on the same topic around inventory optimization, because I think it's a pretty broad topic and it's quite interesting. And so in the coming weeks, we will announce a new discussion that you guys can come back, and we will continue the discussion and also talk about the topics that we didn't have a chance to cover today. So thank you again for being with us. Thanks for the audience for all those questions, and thanks to our panelists. And we again look forward to see you at our next event. Thank you.
Thanks very much. Bye-bye. Thank you.
Bye.
Bye.